Hey everybody, it's Pete Renzulli. Welcome to today's episode of Stocks for Breakfast, and welcome to Stock Trading Pro. Very grateful to have you here with me. As we do every Monday, we're going to set up the entire week. It's really important to actually do game planning before you decide to take risk. And the kind of risk that has been the right kind of risk is actually what we're going to talk about today. We actually got another book recommendation. We get a bunch of questions about stuff in the back. You want to make sure that you pay attention today, because today is going to separate the difference from why do I always seem to be running in place and I can't get anywhere when it seems like other people are always winning? That's the question we're going to answer today. But more importantly, very similar to what we do all the time inside of our community, is I want everything to be actionable. So when we're talking about the stock market, it's one thing to know what you're looking at. It's one thing to know what to do, but actually doing it at the right time is completely different. And that's what we're actually going to dive into today. We're obviously going to talk about Jerome Powell today. We're going to talk about that big list of green stocks that we had on the thumbnail today that we're going to map out and actually show you that there are pockets of opportunity, stocks that are actually breaking out right now. I think the challenge that a lot of people are having in the market right now is that it's not the popular stocks, the Magnificent Seven, the stocks that we all know and love. We know NVIDIA had a big week last week. However, it pulled back 2 days hard after earnings. It's actually setting up a buying opportunity for me today, and I'm going to explain that opportunity today. It's actually one of my favorite setups. We're also going to break down the sectors heading into this week and then individual stocks that are in my game plan for the week. I'm all jazzed up. My first cup of coffee's out of the way. Got Investors Business Daily out of the way. We're going to actually nail it today. So stick around. Be back in just 1 second, okay? Okay, so obviously I want to thank you for being here with me. It means a lot to me that you've chosen to start your week with me. Starting the week out and which stocks to buy, the best stocks to buy right now, is very, very important. And I'm going to tell you straight up, stock selection is a monster part of success. I think a lot of people don't give it enough credit, where you spend a lot of time learning what to do, but you don't take that extra step and you actually get involved in the right stocks. And we're going to talk about what that means today. But I want to talk about this book. I want to raise your hand if you feel like you know everything, if you feel like you're ambitious, if you feel like you're just never quite where you want to be. And you're working hard, and over the years, maybe a little further than you know where you were, and you've made some progress, but you're always focusing on, why am I not further along? Why am I not further along, right? Well, I want to recommend this book. It's called The Gap and the Gain by Dan Sullivan. And I'm going to actually just break it down for you, because it absolutely applies to what we're about to look at in the stock market. So what this book does is it discusses the fact that a lot of ambitious people like we are, you're on the video with us right now, you're obviously trading stocks, kind of are never satisfied. And we kind of, in our mind, we say, well, I'm ambitious, and that's why I'm where I am, because I'm never satisfied. I'm always pushing myself. The problem is that you always feel unsatisfied. The problem is you always feel like you've never accomplished anything, and you're using that as a mental crutch. What this book does, and I highly recommend it, is that it really gets into the fact that the gain, which is actually where most of us have already achieved something, is where we should be spending some more focus. So if you happen to be watching the markets this year in 2023, and you've made some profits, you've had some success, and then August kind of comes around, and I'm actually going to put this up on the screen. You get this kind of price action over the last 4 weeks. Let me zoom that in a little bit just so it's easier to see. You can see that we've had pretty much a whole big ball and nothing, right? Consumer cyclical breaking out a little bit on last week. And then you can actually see about as neutral to negative as you could possibly get. Again, consumer cyclical actually coming up there and hanging in there a little bit. So it's very, very easy for us as traders, as ambitious people who feel like there's things that we want to accomplish, to look back on August and focus on the fact that we didn't accomplish what we wanted to. We got beat up a little bit, maybe even lost some money this month. This has been a challenging month. Raise your hand if you found August and the stock market to be like, what the heck just happened? May through July was super easy, and August came around and like you got hit, like you ran into a brick wall. This is where long-term thinking in your trading career, and I'm going to call it a career, even if you have a full-time job, it doesn't make a difference, because you could be running a trading business part-time. This is really where you need long-term thinking. Now, it's very easy to be dissatisfied with how you've done recently and then completely forget about how well you traded for the first 7 months of 2023. That's what I want you to remember. And that's what this book does, is it gets you to remember what you've gained and not live in the gap of what you have not accomplished. I know that's a lot of double negatives, but essentially it means take a look, smell the roses, and make sure that you learn from your own experience, which actually now takes me into what we're going to be looking at for today and setting up this week, which is the last week of August heading into Labor Day. In case you don't know, we got a 3-day weekend coming up. Very excited about that. We got a barbecue going on in my backyard. If anybody's in the neighborhood, you're more than welcome to come. Make sure you just bring a 6-pack or something, whatever you want to do. So let's kind of hop on over into the market, because setting this up is very important. But I want to first bring over the conversation about what we had behind the scenes today. Okay. I'm reading a good book that introduces the topic, why do some people always seem to win? Now, here's the thing. If you've been a regular viewer of our channel, if you've been around for a while, you know I'm a very big fan of Napoleon Hill. And if you don't know Napoleon Hill, he wrote Think and Grow Rich. And one of the things that was the most surprising to me, because it was actually recommended as a book of success, a book of self-development, a book of achievement, I could not believe how many people in that book, it was all about the stories of how much they failed before they eventually became successful. So all of the struggles and challenges and frustrations that all of these famous wealthy people went through before they became successful. I want you to keep that in mind. It was a shocking thing for me when I finally read it, right? So what does that have to do with the markets right now, right? So why do some people always seem to win? We always know those people and all the famous people, right? Without getting to the weeds of the book, the author discusses of something called asymmetrical wins. Okay. Now I want you to keep remember everything we're about to talk about has to do with the market. It has a lot to do with the market, especially this week, but especially long term. Essentially, he talks about big bets. And this is a huge part of what I teach. And I hope you really understand this today. The author quotes Jeff Bezos and the idea of hitting home runs. Most people see the big wins and see that person as lucky. But what they don't see is the size of the bets. Now, I want to tie that back into what we just talked about in the market here and look at the last 4 weeks of trading and then kind of tying that back into what's going on in the market here. So if you could even just kind of think about the conversation that we've just started, which is the size of your bets and what he calls asymmetrical wins. We're gonna break this down a little bit more. Think now about how it was to trade the first 7 months of July, the first 7 months of 2023, which ended that big rally in July, and where we've been during August. So I want you to learn from your own experience. You don't need to read a trading book to get value out of your own trading right now. Look at that chart. Look at where we've been in 2023. Pretty good rally there, kind of nothing here. And this is really where the AI conversation really kicked in, basically from March through July. And then we had what we've seen unfold in August so far. Before we kind of get ahead of myself, but I just want to get these two heavy volume reversals, this one right here and this one right here, super interesting. That's a big part of what we're watching, and that's a big part of tape reading. Kind of behind the scenes, we call that dynamic rotational optimization. So essentially what we're doing is we are optimizing the rotation in the market for when we should be taking those bigger bets. Now, that's the part that I want to get across here. So what I want to really help you learn right now, okay, is think about this. Did you take appropriate risk when the market was super obvious? And have you reduced the risk that you should be taking right now based on the current market conditions? I know that's a mouthful, right? If you happen to be watching this live with me right now, 7:40 in the morning, God bless you for being here with me. If you happen to be watching the replay, what I'm asking you is, do you understand the market conditions that call for trading a little bit bigger, holding a little bit longer, versus the market conditions that are tough, choppy, directionless, confusing, and do you lower your risk accordingly? Now, here's where asymmetrical risk and win-loss percentage kind of come into the conversation. If you are trading stocks, if you are an active trader, whether you're day trading, swing trading, position trading, doesn't matter. We're not talking about buying now and selling in 10 years. We're talking about you making active decisions. Do you have a process in place that tells you the two different scenarios? And I'm going to break that down a little bit more for you right now. Okay. So most people don't see is when to place those big bets. And that's essentially what Jeff Bezos was talking about. Obviously, Jeff Bezos of Amazon, right? Outsized business gains happen when the stars align and it's the right thing to do. Reasonable risk for a 100x return. At least that's what this author was quoting. So what you need to be thinking about right now, and especially during August, and this is a massive, massive point that I want to get across to you and will hopefully reduce all that stress that you have. Maybe August came in and I see here August, right? Same exact thing. I think a lot of people are going through that right now. But here's the thing, and this is where a lot of really smart traders, a lot of really smart stock traders just need to know that one extra thing. And that one extra thing comes down to, yeah, it sucks losing money, right? You have bad trades, or I should say trades you like that didn't follow through. But here's the thing, and this is really where you're going to separate yourself from everybody else. Like, right, we all do our weekend reading. We have the stuff that we get in there, and we try and keep educating ourselves as much as possible. Here's the thing. Even if you got beat up on a per trade basis in August, and you're like, man, that was a good idea, it didn't follow through. That was a good idea, it didn't follow through. You should not have had higher exposure. So in other words, when the market's really good, proper trading, at least that's what I taught people on my trading floor when I had my office in New York City, proper trading meant asymmetrical wins, bigger bets, because there's a higher likelihood of hitting your profit target versus your stop loss. Now, raise your hand right now if you believe that there is a great chance that you're in a bullish move right now, and anytime you buy a stock, everything's just going to go up. We're not in that market right now. Let's take a look at that again right now, and let's take a look at what it looks like. This has been the last 4 weeks. This has been August. Choppy, right? So here's the part that I want to get across to you. If you are frustrated, angry, overwhelmed, you hate the market, you're not in love with it anymore, right? It's okay to have losses in a tougher market on ideas you like, but because of the market conditions, it should have been smaller losses, because proper trading means you allocate less to the idea, even if you like the idea, because it's a tougher market condition. I want to just say that one more time. If you're in stop and go traffic, you don't step on the gas. That's what you need to remember. But the other side of that trade is what Jeff Bezos is talking about here right now, is it's okay to put all those little bets out there. A few of them might follow through. You might get some back and forth right in the current market condition. But every once in a while, when things line up, you owe it to yourself and you owe it to your trading account to get a little bigger and to hold a little longer, because the market is calling for it. So again, raise your hand if you had a tougher month of August. Did you do the right thing? Do you have a strategy in place that tells you, man, this is awesome, everything looks amazing, let's go get them, versus sideways, choppy? And we can even kind of tie that into Jerome Powell, right? Fed Chair Jerome Powell kept his Jackson Hole speech vague, and that's no accident. So what does that mean for us as traders, right? We're going to get into the big list of stocks in a second, but what does that mean for us as traders? Well, we need to start breaking down the market and what that means for expectation. What most people, traders, entrepreneurs miss is the timing of those bigger asymmetrical bets, right? It's strategic. It's not all the time. So I want to make sure that this point is really drilled home for you right now. Do you have a process that tells you when to trade bigger or less? Think about that. If the answer is no, just spend a little bit of time, get a legal pad out and put your phone on cell phone mode and say airplane mode, and ask yourself, how do I know when I should trade bigger? How do I know when I should scale back? And how do I know when I should do nothing? I will tell you flat out, and I worked with over 10,000 traders easily since 2000. When I had my firm, when I did my teaching all over the world, most traders make the mistake of trading the same size all the time because they can't make a difference between stop and go traffic in the market and when the road is wide open. In our minds, we always see it as wide open because we're only thinking about the gain. But the gain has to be thought of in the context of how likely is it that I'm going to achieve that gain? And the more pieces of the argument that you put into that, the higher the likelihood you're going to end up trading the right shares for that market condition. So what I'm doing right now is I am mostly cutting back on my initial position size. And if you happen to be on our community right now, which I know a lot of people who are on this call right now, good morning, LJ, and Tim, good morning, right? We spend a lot of time right now where we're talking about, instead of maybe working that position in 2 pieces, we've been saying maybe we'll do it in 3, maybe even 4 on some of our swing trades, because we want better feedback, positive price action in our direction before we start to have a bigger piece. So if you think about nothing more than that this week, that's very, very important, okay? So I just want to walk through this, and then we're going to get into the stocks, right? Friday's price action marks consecutive weeks ending with bullish heavy volume reversal days. So that's the distinction that we made here. So you can actually see this candle right here. This was the previous Friday, what we call a bullish U-turn. So it actually traded down, rallied back up on bigger volume. And then we did the same thing on the Friday that just finished. So what does that mean? And what does that mean for position sizing, right? So let's continue with that. But for the 3rd straight week, the market could not follow through on the lower side of the market while in the initial stages of bearish order flow. So what does that mean? That means that the market right here validated a potential change of trend from here to here. So we had a push down and a pause. And this was Thursday. If you just looked at Thursday and you're like, oh my gosh, look at that thing, we're gonna get crushed on Friday, right? That's what quote unquote should have happened. We should have broke down, had another leg lower, but we didn't. We actually had the opposite of that on Friday. So think, just without even getting into the nitty gritty and the fancy talk about indicators and all kind of stuff, what does that mean? What does that mean? And what does that mean for the proper risk at the moment? Remember, this is all about risk, leverage, reward, right risk at the right time. This is what will elevate you to where you love trading, because you're never going to be hurt if market conditions are bad, because you're kind of tiptoeing your way in, because that's the proper thing to do. And when the market conditions are fantastic, once you get a few trades that follow through and have asymmetrical risk on, bigger risk on that trade because it warrants it, you're going to find that there's going to be a whole bunch of small wins and small losses that wipe each other out. That's kind of the cost of doing business. And then you have a few trades per month that follow through, and those are the ones that make your account go up. So you're basically taking yourself out of all of that stress about whether one trade worked out, and you're like, okay, I did what I was supposed to do, had a little bit less risk, didn't follow through. That's okay. I like the idea. But then you get a couple of other ideas that just continue to drift higher. And those are the ones that we're going to talk about right now. But let's finish up this point because it's setting the tone for the week. Okay. Some more observations. 7 out of the last 8 days. So again, these are the distinctions we need to learn how to make. Traded around 440. So that's what we're talking about right now. So what does that tell you? What does that tell you about the smart money footprints of the market right now? 7 out of the last 8 days hit 440 in the SPY. There's no bias. We went sideways for the last 8 days. So now again, learn from this. Learn from the decisions that you've made over the last 8 days. Did you take the appropriate lowered risk for that market environment, because that's what the market was telling us was available? This is not complicated. When you know what you're looking for, you're never lost. This is a really big part of trading. It's when you're not sure what you're looking for that the market becomes overwhelming and confusing. So what we're trying to do right now is I'm just trying to give you a little bit of focus to say, okay, what actually happened and what does that mean how I should trade? 7 out of the last 8 days hit the same price, which means it's been a choppy mess. We also talked about the last month. This is the last 4 weeks. Do you see anything in there that says, man, I should have made so much more money? It wasn't there. So I want to be clear about this. If you want long-term success in the markets, you need to recognize these subtle things of, should I step on the gas or is there a rubbernecking delay, and then trade appropriately. It's easy to do when you have the right roadmap, and hopefully that's what I'm kind of giving you right now, right? So let's continue with setting up the week, all right? Great. So what does that mean, right? It means good traders will reduce their risk because our expectations for bullish profits are lower. Doesn't that just make sense? If the odds of making money are lower, even if you like the deal, why would you put more into the deal if it's not A plus idea. Now we can be very stock specific. Like obviously we're going to talk about that, right? We have this breakdown of the S&P 500 for the last week. We have a select list of stocks that have, this is the one that you looked at when you came into the call today. You can see that there's some ideas here, right? We could probably talk about MasterCard and Visa sitting right on breakout levels. We could talk about IBM, which has really been great since earnings. Look at this trend in IBM compared to the rest of the market. So for all of you that are saying there's nothing to do, that's just not the case. You got to dig in a little bit deeper. So heading into this week, FSLY, another one right on the tip of a breakout. You can zoom this out a little bit and see how much room there is to go up to the next level. Not an expensive stock, but there's some room there, right? That's a good percentage move. So let's keep mapping this out on how we're looking at it, right? The easiest trading is when the bullish trend is obvious. Right now we have bearish to neutral. Again, I want to keep tying this back. What kind of risk are you allowing yourself to take in that market condition? All right. For the moment, good trades are very sector specific, and that's kind of what we just pointed out over here. So obviously technology having a pretty darn good week and a half, right? Financials, a couple of pockets of financials are showing a little bit of strength. A couple of industries in industrials, specialty industrial machinery showing some pockets of opportunity. So if everybody that's sitting back there right now saying there's no opportunity, the market keeps going down, I can't find something to do, that's not true. There is opportunity. It's just not the big picture. So if we kind of zoom back out to the S&P 500, this is a little bit different perspective. This is the whole S&P 500 versus this is a list of stocks that meet certain stacked order flow criteria. So in other words, the smart money has been spending money and they've been doing it over time. 1 hour, 1 day, 1 week, 1 month, and then they kind of do it in pockets of places like we're seeing over here, right? So it's not a question of whether there's some opportunity. It's a question of the quality of that opportunity, all right? So we spent some time on Saturday discussing the difference between long-term trading success and long-term frustration. So I need you now to raise your hand. Am I in love with the stock market right now, or is it driving me bananas? We spent time on Saturday talking about certain types of beliefs you should have for long-term success. And that's kind of what we're shaping right now on this video, right? And which one you experience comes down to one thing: long-term success or frustrations. Can you make the right choices based on current market conditions? Now that means that you know what current market conditions look like, and are they awesome? Are they okay? Or are they, I'm confused out of my mind and I have no idea what I'm doing or no idea what I'm saying? So we're going to go back over here, right? If the market, specifically the S&P 500, traded around the same price for basically 7 out of 8 days, and prior to that, it did the same exact thing over here around 446, it means that right now we have a slightly bearish directional bias to neutral. Bearish to neutral in the big picture, all right? So this is all getting back to this. This is the primary question. Do you understand great conditions, and do you make the right decision during those conditions, right? Great traders, which I hope that you're aspiring to be, I really do, adjust risk and leverage up or down based on the quality of the deal. So again, if you like me, you like the show Billions, you watch Bobby Axelrod and all of those guys that are hedge funds and putting all that money out there, right? You have to think of yourself as a portfolio manager. You're managing your own stocks. You're managing your own portfolio. How good is the current deal that you're looking at right now, and what does that mean for your initial position size? It doesn't mean the stock can't continue going. Of course it can. But based on the conditions, you have to make sure that you're going in with the right initial position size, plus with a plan of how and when to add shares. Very, very important. It can't be an emotional decision or a guess that if the stock is doing exactly what you want it to do, you need a plan that tells you this is fantastic. Let's go get some more. That needs to be planned out before the trade. Okay, so let's continue with this week's ideas. All right. Great traders adjust risk based on the deal. They don't get mad or frustrated at the market. So let me ask you something. Have you gotten mad or frustrated at the market over the last couple of weeks? That's not good trading. You got to get yourself out of that emotional whirlwind. It simply is what's available right now. Sometimes it's amazing and winning trades are easy. That's probably 40% of the time. Sometimes it's challenging and you really need to pay attention. That's probably 60% of the time. And that's what we have right now. Be patient, be smart, take some wins, keep yourself in the game until it's the right time to go big. Now, hopefully we're setting the tone for you for the week. So let's think about the big picture and how that's setting up the ideas that we're about to take a look at. Basically, the market right now is bearish to neutral. Bearish pushing down over the last 3 weeks. Last week or so was neutral, went sideways. But then Friday, after it looked like the market was falling apart on Thursday, we actually rallied back up on big volume, closed positive, and we're positive pre-market today. We're looking for follow-through. So none of that is on the same page. We have everybody's pulling in different directions right now. So that should immediately tell you that I need to make sure that I am working my way into positions instead of taking max risk because the picture is cloudy. There's no other way to put it. But that does not mean we can't find ideas, which is what we're going to talk about right now. So we're going from the big picture of the market up one level and then up another level, which is sectors, industry groups, and then stocks. So the way that we break things down is the more of that foundation you have underneath your ideas, the more likely you're going to get follow through, which means you end up getting outsized gains on your trades, which is something that's unique about the way that we do things, because it's not so much about win-loss. It's about when you're in the right stocks and you have more of that on your side, the gains are larger, so the losses don't matter, provided you take losses where you're supposed to, where you plan to. Okay, so let's break down the rest of the ideas. We're going to work our way through this list of ideas that I like coming into this week. Okay. By the way, also, if you want to, there's a nice options. I'm going to actually post this in the link here, right there. Okay, I'm going to post that into the link right there. You can actually, John does a great job of writing about the current market conditions, trading the news, and then ultimately getting to the point where we just made a really long argument that the market's kind of choppy and sideways. John, in that article, actually breaks down that you could take advantage of it as an options trader, where you're basically using time on your side as the market's going sideways. You can take a look at that. I just posted that, and I'll post it in the link below. But getting into some more ideas for today, so you can actually see how we break it down, right? Market, sector, groups, and then stocks, right? So if we get a little bit more into sector rotation, as discussed on Saturday, we're entering the new week with bearish order flow, but bullish momentum from Friday and a positive close for the week. Plus, the SPY finished on an inside week. So that's actually something we haven't talked about here as well. I think FSLY is a bear flag. I completely disagree with that. That is an uptrend. I'm not sure what you're looking at. That's an uptrend. There's been buying pressure in the stock now for 2 different quarters. So I'm not sure I agree with you. Maybe you're looking at a different time frame than I am, but that's not a bear flag. That's actually a breakout in a stock that's been rallying for 5 months. So maybe we're looking at things a little bit differently there. But let's go over to the stock and let's go over to the market. So now we also have the SPY is an inside week, where the complete price action from last week was inside the previous week. Okay, so let's make sure we have that in our game plan as well. About as mixed as you can get. So now hopefully that means something to you, right? From a risk perspective. So keep that in mind as you make choices for the correct risk for Monday and for this week. For me, that means okay with starting new trades, but they won't be max share size. So let's just stop and talk about that for a second. I am actually mapping out the kind of position size I am planning to take this week based on all the information that we have coming into Monday. And then if the week starts to follow through on last Friday's heavy volume bullish reversal, then the list of stocks that I just showed you will probably get a little bit better follow through because they already have relative strength. So you said we're putting the pieces together. It's not just a matter of running the scan or looking for an entry or any of those kinds of things. The more you put into the trade, the better the argument for putting on that trade, the more conviction you're going to have. But the only way to have that conviction is to actually spend 15 minutes doing the work in the first place. Okay. So I'm going to walk you through my game plan for what I'm looking at heading into the week now. Technology shows the largest number of stocks with bullish stacked order flow. And ironically, NVIDIA sits by itself in semiconductors. Hardly any of the semiconductors are actually rallying right now. I do want to talk about a trade in NVIDIA that I'm looking at right now. which is you can actually see that this is the previous place that NVIDIA actually broke out from. It pulled back now for 2 days after earnings. So I'm basically looking at the next area. I'm looking for NVIDIA to hold that support at right around 450, maybe a little bit higher around 452. So we'll see if it stays above that level before I start looking for a new idea. Software seems to have had the best week. Intuit led the move higher with the $20 move on Friday. So you can actually see the breakout here after earnings. So that's one stock that I'm looking at this week. Now, I want to be clear. That doesn't mean I'm buying it today. I still have to set up the trade, the idea, but we're building an argument for which stocks should be in my watch list this week. That's the key that I want to get across here, okay? Oh, and by the way, before we actually get past it, 3M has had a lot of problems over the last 18 months with lawsuits, and now it looks like they finally settled this one about the earplugs. This is typically a short-term bullish trade when a settlement gets done because it gets indecision out of the way. They're not sure. How's this going to play out? What's the settlement going to be? Settlement is now over, which should be short-term bullish for 3M right now. And you can see it's actually up $6. So the stock is actually bearish to sideways. This might be a short-term news catalyst type trade, something that we'll be keeping an eye on in the community for the week. So other breakouts that set up this week in software, FSLY and WDAY. Starting to see a lot of earnings plays play themselves out. One other stock to note is IBM. Again, I just showed you the chart of IBM. It's actually had a really good relative strength since earnings, which was over here. Pulled back a little bit with the rest of the market, but the last 6 days, 1, 2, 3, 4, 5 days, higher highs. Money is being put into that stock right now. Now, I want to be clear about this. There's finding good ideas and there's timing your entry. The entry in IBM was down here. So we're actually 5 days after that as we're heading into a new breakout. So IBM for me needs to set up a better initial entry before I look to accept that risk. It's showing relative strength though, so it's in my list. That's a very big part of what we're talking about. So it's beyond the optimal entry. So the next entry needs to pause and reset the risk reward. I also have an alert set for Dell over 58. So give me an idea of some trades are looking for now. Some trades I'm looking for them to hit certain levels before I get involved in them. And that's what we call a tracking journal, by the way. Okay, financial shows 9 stocks with stacked order flow. So you see what I'm starting to do here as well? I keep mentioning groups of stocks. When smart money has attention on groups of stocks, that should have your attention as well. Now, it's not the popular stocks you might know. It's not Wells Fargo. It's not JP Morgan. It's not American Express. Right now, we're looking at MasterCard and Visa, both resting near levels that we're looking for them to punch through and hit some new trades. Industrial stocks made the list as well. ETN just posted 6 higher highs, while EMR and IR show breakout potential as well. So if we kind of work our way back over here, that's this list of stocks over here. So we're starting to see some industrial stocks, different industrial stocks, not GM, not Caterpillar, not Boeing, showing some breakouts here as well. So again, now what we just talked about in IBM, this should be something you recognize immediately. That's fantastic, but it started rallying 6 days ago. So this one also will be in my watch list this week, but it needs to reset for a new entry. Very important. Pick a side, then pick a spot. Okay. Working our way through VRT. Again, for those of you that say that there hasn't been anything to do, VRT has tripled since May. 2 consecutive earnings seasons. I will tell you that we've spent a lot of time in our community focusing on earnings, not predicting what they're going to be, but waiting for them to come out. And then we have a very specific strategy for trading the earnings after the fact. And John actually talks about that over here in the options breakdown as well. Okay. Software application stocks are solid gains. We just talked about a bunch of those. Intuit actually just broke out. And here's another list for industry groups. APP above 41 is probably the idea that I'm going to be heading into the week with. Now, remember what we talked about before, where we talked about asymmetrical trades or asymmetrical setups, trades that have obvious stacked order flow and reasonable risk and sufficient profit potential. Those are the ones where you look at them, you're like, wow, if that thing follows through, that could be a pretty big win. So let's take a look at that with that context and how that looks here. This is obviously a pretty big level, right? This 41 level, we're about $1 below that right now. maybe some minor resistance here, but 58 is the next big level. So this is one of those situations where, for me personally, if the stock gets over 41, it has no resistance really till 58. If the market catches a bid and this strong sector remains strong and the stock takes out 41, so again, just put in 3 different pieces to the trade and how it's going to affect me. Not complicated, but you need to list them out. That's going to increase or decrease the likelihood of you placing the trade and what kind of conviction you're going to have. If this follows through, there's a 40% potential gain on this stock if those things happen. If it does, the stock already has relative strength, has great profit potential. This is one where I would get a little bit more aggressive building that position if it gets over 41. Right now, it's closer to 40. So there's nothing to do until that happens. Okay. So I'm going to break this down for you. You just saw the entire thing. You might need to come back and watch that part of the video again. I gave you that big list of stocks where you can actually see what I'm game planning for this week. So if you want to take a snapshot of that, that's the stocks that are at the top of my list heading into this week. They meet stacked order flow criteria over the last quarter, the last month, the last week, all of that. And group specific order flow is also at the top of my list. So hopefully we broke it down for you this week. But more importantly, I really want you to spend time this week thinking about how the market conditions are affecting your initial position size, and are you scaling back when it's tougher and less obvious, and are you getting a little bit more aggressive because the market conditions call for it? Now, again, aggressive is different for everybody. So as we said before, this is for educational purposes. You have to make the final decision, but aggressive could simply mean that you're trading maybe another 100 shares or whatever it happens to be. Maybe you're going to risk 3% of your allocation on an idea instead of 1%. That's different for everybody. The most important thing here is, do you have a structure in place to tell you right now is awesome, or like in these stocks, right now is awesome, or are you looking at this and you need to be realistic about what is the proper risk for that kind of market condition? So I gave you a big list of stocks. You saw what's in my game plan this week. You also saw that big green picture. Write some of them down. See how they follow through this week. And let's track APP this week, see if we get the breakout and how that follows through as well. All right. If you have any questions, definitely leave a link, comment below the video. I'll be more than happy to get back to you as soon as possible. If we did a good job on these videos and you enjoy them, do me a favor, give us a thumbs up and make sure you hit subscribe, because it'll also let me know that this is the kind of stuff that you like. All right. Let's go have an awesome week, everybody. I will speak to you soon. Thank you so much for being here. I really appreciate it.